This is Chad Toyne with your Tuesday, April 21 Market Minute for Grains from Trader PhD Ag Marketing. We hit a cotton sell signal for July cotton back on Friday as an overhead price target got hit. Keep cashing in and making sales when targets get hit. It's the core foundation of having a well-rounded marketing plan. And if you like to do buybacks or scale down your selling in the face of what might be higher prices, that's when looking at a forward basis or a buyback plan or doing courage calls might come into play with your broker. Putting these two tools together, working together instead of one, creates a synergy where 1 + 1 doesn't equal 2. It sums up to something more than 2. You know what I'm talking about. So many things you guys might be missing out on if you use just one single tool in your toolbox. Send us a text and say tools, and we can reach out to you and have a chat about how we might be able to help you step up your game. Now let's talk about markets and weather and the fertilizer survey and Iran. In the grains, Iran, a few days ago in the Strait of Hormuz, it was declared to be open by Iran, and then they closed it. The crude market took a dive and then has since recovered some of those losses. But then a major escalation occurred when the U.S. Navy has a blockade, and the Iranian cargo ship had challenged the blockade, and the U.S. Navy disabled the ship by blowing a hole in the engine room. U.S. troops have boarded, and I've not heard much detail beyond that. So the U.S. blockade is being enforced, and not only that, but the ports of Iran are being sealed up. The strait is sealed up, and the outer waterway from the Strait of Hormuz south into the Gulf of Oman has another line of blockade that's being enforced. This double wall has many cargo ships and tankers caught in the middle, trapped, unable to enter the Persian Gulf, unable to escape out of the Gulf of Oman. Trapped. So what's crude doing? It's not too alarmed at all. We're currently looking at about $90 crude. But let's look at bean oil. Bean oil is up $2.48 today, blowing the top off of the already firm uptrend with some choppiness. Any hesitation that may have been seen in the bean oil market has been erased with today's action. The biofuel play here that's clearly linked to what we're seeing in the Strait of Hormuz says they are taking it seriously. Or someone is. Who would be worried about bean oil but not crude? If you think it's China, I'd be right there thinking about the same as you. China has a lot of crude oil reserves, but I think they are worried about food security. And that's where fertilizer comes in. Folks, the table, the chessboard, so to speak, is being set up so that the United States will have global control of enough energy and fertilizer, food and fuel to command the world market supply. This is the future of deglobalization, or at least how the Trump administration is playing the game. Eventually, we are going to have the ability to have cheap, abundant food and fuel for the United States and for others around the world who support the vision that suits the United States. If you are a country or people that the United States sees as a threat to our national security, you're going to be effectively compelled to the will of the United States by manipulation and control of food and fuel, the top two core components of what all people and countries need. This seems to be the direction that the future is headed. So let's talk about fertilizer and geopolitics. This is where it hits grains. Control the world's fertilizer, ration supply for countries like China and Brazil, and keep their crop size down. This boosts grain prices massively. The United States will have cheap, abundant fertilizer in the fuel. 2027, big crops as usual, but China and Brazil, countries that aren't well aligned with our view about how things should be, they will have to pay enough of a premium for fertilizer that they will be effectively rationed, either economically or physically, by the help of the U.S. Navy stationed in Iran at the Strait of Hormuz. You think that having energy security was a big deal in geopolitics? Try food security. It's good to be at the top of the food chain. So folks, prepare for some short-term high prices for both fertilizer and fuel. Expect low prices for both crude and fertilizer in the years ahead, as well as high prices for grains. The future never turns out exactly the way you think it will, but we are seeing all of the needed components that are slowly, or not so slowly, coming together that gives us the chance at exactly this. Americans can expect a rosy outlook ahead, especially the American farmer. What's high grain prices going to do to land prices? What's high productivity in the United States going to do to our economy? Think higher interest rates, think inflation, and think a very strong U.S. dollar in the years ahead. So think about how you want to position yourself with the decisions here in 2026 so that when it's 2030, you're not kicking yourself for not being prepared. I sure don't think it's going to go the other way. So bean oil is surging today, and that has soybeans up nearly a dime most of the day. Corn is modestly higher following crude's move that's also modestly higher. Wheat is higher, some on the unrest in the Persian Gulf and some on the fact that HRW wheat has poor ratings and there's not much rain relief in sight in the forecast. On the charts, corn has a nice firm tone. You might see some more upside in corn, especially if we continue to have wet weather and planting delays in the Corn Belt. New crop no-V beans have surged higher and they're ready to challenge the year's highs set back over a month ago. All of this is being fueled by bean oil, as mentioned earlier. I think there's some new fun to come in corn and beans. And now when it comes to wheat, look out. Here we go. Chicago wheat is way behind, but KCHRW is itching to explode higher, and Minneapolis spring wheat has already broken out to the upside. In all three, corn, beans, and wheat, everything that we're looking at suggests that we could see things really wake up here, and it could happen here anytime. Let's have some fun. That's it for today. I'm Chad Toyne, and this has been Trader PhD. Past performance is not indicative of future results. Futures trading involves substantial risk and is not suitable for all investors.